Okay, good morning, everybody, and thank you for joining us for our latest webinar. My name is William Page. I'm the head of global sales, and I'm joined on the call by Andrew, who's just popped up there. Andrew Salmon, who's our head of Kenya. Today's subject is obviously about the Northern Powerhouse in the UK, in the north of England. We look forward to discussing this with you. It'll be about 30 minutes, absolutely no more than 30 minutes. Next slide, please, Nicola.
So this is the agenda for today, and good afternoon, everyone. We're going to be focusing on the Northern Powerhouse and the cities that are in this economic region. We're going to have questions at the very end, so you can actually type in any questions throughout this presentation, and then we'll answer them at the very end.
Very good. Well, look, most of you obviously on the call, I can see a lot of familiar names here, actually know who we are, but we're IP Global, obviously, headquartered in Hong Kong. We've got all offices all sort of over the world. I sit in the Middle East, Andrew sits in Kenya, and we've got a significant team as well in the UK. We've now sold and helped clients purchase well over 5,700 units in various different markets. That's across 18 different countries. I think it's about 27 different cities, and it's over $3 billion worth of money invested now. So we've been around a long time. We've got a lot of experience at this kind of thing, and we were founded in 2006. We help clients choose investments. We guide people in terms of their budgets, in terms of their risk profile. We then manage those buildings, collect the rentals. It's a long-term relationship that we have with our clients. We help with mortgages as well. So the whole process, the whole journey that you have with us is very much sort of a long-term journey. The unique thing that we do is we underwrite. So we are actually committing to purchase what we bring to market, basically. That's what we offer developers. We offer developers an exit, and we therefore then can offer clients something we've secured exclusivity on, and that we ourselves are committed to buying if we weren't to sell. The next slide, please. When selecting markets, this is our sort of recipe book, if you like. These are the ingredients that we're always looking for. There are many great, cities out there. I live in one, Dubai. I'm sure many of you have joined us from there. But there's a lot of things that are ticked in the ingredients are there. But there's a few things that are missing, which perhaps would be sort of the supply and demand imbalance. It's slightly sort of too volatile the wrong way, but these are the things we're looking for. We're looking for an imbalance the right way on supply and demand in cities. We're looking for strong population growth. We're looking for wage inflation. That's absolutely key. And then we're looking for cities that are regenerating, cities that are improving and reforming, if you like. And then on the sort of micro, we're obviously very focused on the people that we work with, and we're particularly interested to make sure that we have the sort of legal protection of owning that real estate in that particular country. And the other thing is that's not in here is that we can mortgage it, that we have the ability to get mortgages for non-residents. But it's just always worth sort of bringing up this is the recipe page before looking at investments, and we would encourage you to do the same. Next slide, please.
So just in case anyone's not aware, the Northern Powerhouse is a government initiative that was introduced in 2010 to boost local economy by investing about £7 billion in skills, innovation, transport, and culture. So one of the major schemes in terms of infrastructure, they spent over £13 billion improving and modernising northern transport. That includes the HSP2, and they spent over £200 billion in investment in schools and healthcare. The universities in North provide a quarter of all UK science, technology, engineering, and math graduates. There's 119,000 jobs that have been created and 12 billion delivered to this region. What's quite interesting, if you put all the northern cities in the Northern Powerhouse, it was a country, it would be the 10th largest in Europe. So it's got a GDP of about 350 billion. Next slide, please. So this is the Northern Powerhouse. It has Newcastle, Leeds, Liverpool, Manchester, and Sheffield. You'll notice today that we haven't got a slide for Liverpool. We've actually invested there a few times. We found that it's a market that's a bit more difficult than the rest. The other markets are actually stronger. They've got a stronger rental market. Well, the projects that we've had haven't been as successful as the other cities. Next slide, please.
Thank you, Andrew. So hopefully you've got an idea of what the Northern Powerhouse is. It's a big fund. It's huge government spending. You'll hear Boris, if he's not having a party, he's talking about the levelling up and effectively driving wealth into the slightly less wealthy areas of the UK, which is the north. You know, the UK's always had the wealth sort of trapped in the southeast corner. So this levelling up is a big thing that you'll hear. Now, why are we so interested in it? I mean, we're a property company, but ultimately all of that activity, all of those jobs that are being created, all of that money that's being invested, can put pressure on house prices in these key cities. And this slide shows you here. There's a few notable mentions here of obviously Manchester's predictions by JLL, Jones Lang LaSalle, and they're predicting 6s and 4s and 5% growth in Manchester. And the same sort of percentages there for Leeds and Yorkshire and the Northeast, slightly lower, but still pretty strong. So we're going to have a little look now about why are some of these cities predicted to see these levels of growth? I mean, obviously the Northern Powerhouse investment plays a big part, but there are many other things going on in these individual cities as well.
Great. I think now we're going to delve into Newcastle. If we look at Newcastle in terms of economic growth, it's expanded by 28% since 2000. So it's totaling 9.4 billion per annum as of 2021. The economy is expected to produce 11.8 billion per annum by 2035. So we're looking per capita rising at 28% since 2000 till now, and that growing by another 20% by 2035. So the key fundamentals that we look at, which we'll discuss at the beginning, like the recipe book, is economic growth in those cities. And you can see in the graph just on the left-hand side that we've got an upward trajectory. And if we look on this graph on the right, there's a population growth, and we're just seeing huge population growth. And what's one of the most interesting about Newcastle is that they've only been really able to fulfill 28% of the city's housing needs over the last 9 years. So these are predictable capital growth markets and rental escalation markets because there's not enough supply, there's a growing population, and there's also more economic spend per capita. So the key things for Newcastle's growth as well has been the government's initiative with regeneration and spending millions of pounds into the first phase, which is the waterfront. So we've got here on the right hand side on the Pilgrim's Place, 110 million pounds have been completed but spent on development that's completed this year. Her Majesty's Revenue and Customs recently just have located their regional hub there, and that's providing over 9,000 new jobs. And there's a lot of science companies, human science companies in Newcastle, and it's one of the new growing sort of employment globally. So it's a really fascinating place, Newcastle.
Yeah, absolutely, Andrew. There's a lot going on. There's the redevelopment of the waterfront as well, which is bringing a huge amount of sort of lifestyle and benefit to the residents in the city with all that investment going in. Okay, so Leeds is a city that you've probably also heard of. Big city, one of the fastest growing economic areas in the UK, actually. There's been a lot of growth in Leeds over the last sort of 20 years. In fact, it's over 100% growth over the last 20 years. So a lot of growth and a lot more growth predicted. You're talking about an economy that potentially could reach 54 billion by 2035, which is another 80% jump. So there's some really powerful statistics. It's a lovely place. There's a lot of law firms. There's a lot of accountancy and banking jobs that are there. It's one of the biggest sort of legal hubs actually for many workers in the legal sector. And of course, there's a lot of students, and students always put pressure on the house market. And as these cities develop and become better places to live, then the idea is that you try and retain those students. You know, that's ultimately the key to a successful economy, is retaining your young, educated population. There has been very little built in the city. There isn't enough being built to fill the current requirement. You know, across the whole city, they've only built sort of 39% of what they really needed to, up to 2020, and therefore, you know, we're predicting, as along with a lot of others, we're predicting some really good levels of growth in Leeds. One thing to point out would be that High Speed 2, which Andrew mentioned, which is a big rail line, also known as HS2, that isn't now going to be coming to Leeds. Now, that could be seen as a downside, and I'm sure it slightly is, but at the same time, we've been trying to buy in Leeds for at least 3 years now. We haven't had a scheme there. And it's been challenging. You know, developers have held the cards, and they've been very bullish on their views on the market, and that's made it difficult to get in. So there's plenty going on, and I think actually for us, we're just beginning to see some sort of realistic values coming to us, and some projects that we want to take on coming forward. So I think that sort of change and shift from funding from government will give us a chance to actually get into Leeds again, because we've had a lot of successes. Next slide, please.
Thank you. So Sheffield is actually a very interesting city. It's grown by 94% since 2000. So their GDP is getting up to 14.6 billion as of 2020. Now, the main things for Sheffield is obviously the population growth, which there's a table on the right here, just showing just really really strong population growth, and then combine that with unemployment decreasing. If you look on this graph on the left-hand side, that's a very good indicator of many jobs opening. You've got really huge global companies that have moved into Sheffield, or that are there and expanding, such as McLaren, Boeing, Rolls-Royce, HSBC. And then combine this with the housing market. You know, the supply there's not enough supply coming on, and so we're squeezing the pressures on the housing market. That's increasing rental escalation as well as capital growth. Here's just an information below here. So 11,000 units were only added into the housing stock between 2012 and 2020. So just very few units coming on. There's an undersupply of at least 11,000 housing units expected by 2035. That's a 26% shortage. House prices have increased by 13% per annum, and that's forecast to grow by 28% up to 2025, so the next 4 years. So incredibly strong city. I think we can move to the next slide, actually, please. So the key factors for a lot of the cities, and Sheffield's story particularly, is the regeneration in the city centres. So we just to pick on a few of the big regeneration projects in the city. You've got the Sheffield City Regional Investment Fund, £700 million invested, 68,000 jobs created, and that's actually coming all by 2022, so this year, as well as you can see there's 12 quite large, very large regeneration projects in the city.
Okay, so we'll just finish off now discussing a little bit about Manchester and what's happening there. I can see some good questions coming through as well, so I've been a bit distracted reading those, so we'll answer those shortly. We're probably sort of 10 minutes away from finishing up. But Manchester's been a big focus for us. We started investing in the city in 2015, and we've had a really good run in Manchester. We now actually manage over 650 apartments in Manchester, and we run them at 98% plus sort of occupancy. So literally when someone moves out, we've got someone moving in. So we're really happy with the city and how it's performed. It has been a little bit challenging to find value in sort of very central locations. We've seen that, but in the right locations, in some of the sort of city fringe areas and sort of some of the areas down towards sort of Media City and Trafford, some of the more value locations, you know, really good value still to be had in the right parts of town. But again, it is the capital of the Northern Powerhouse, effectively. a huge amount of economic growth, and a huge amount still expected. You know, it should hit sort of 50+ billion by 2035. On the left-hand side of this graph, you can see unemployment was, you know, quite high in 2010, peaking, and it's been coming right down. And we're expecting that trend to continue and drop down to just about 7%. So again, we've got a rising population, but we've also got a declining unemployment rate. Right, those two things are quite powerful. If you had a decreasing population and a decreasing unemployment rate, it would be slightly easier to sort of see those statistics. But again, on the right-hand side, you've got the population. That's in green, up to 2021. It looks like that graph was up to, and then obviously there's further escalation predicted. Lots of strong forecasts for growth in Manchester. One of the best cities for sure, being the capital of the north. 22% was what JLL were predicting in terms of growth up to 2025. And again, sort of really strong rental escalation also available in the city. So all the ingredients, all of these cities that we've shown you today, we're seeing the same sort of trends. We're seeing investment into these cities, and that's what they've struggled with. You know, that's the recent sort of Northern Powerhouse initiative that was really to drive this properly, because there has been a lot of talk about levelling up, but again, it's been talk, and now we're kind of really seeing the action, and we're seeing the benefits of the actions that have been taken and the investment that's been made. I mean, you could talk for a long time about the major projects of infrastructure improvement, but you only have to walk around into the spinning fields, the sort of financial hub of the city, to get a feel for how much they've achieved. And you only have to sort of drive into Manchester to see a lot of the towers. It almost looks like it's a little mini Dubai skyline, and it's quite incredible now, actually. But lots going on. 750 million going into Circle Square, creating 10,000 jobs. And sort of one of the bigger ones is Noma, which is in the north, which is over 800 million pound development into office, residential, commercial space. And again, that's set to create up to sort of 15,000 jobs. So yeah, we're really, really happy with the city and the investment as our clients are. Just before we finish, just to touch on, what do we have going on in these cities at the moment? Well, we're working hard. We're very short on stock at the moment, but we're working hard to find new opportunities. Our first launch this year in the UK has been Waterside West, which is on the left-hand side here, which is very central in Manchester. Sits on a nice little canal, so it's got some water views. And this is rented, this is occupied. The developer held on to these units during COVID. They had it 70% sold, and then sort of COVID appeared out of nowhere in 2020. So they held on to the stock. They didn't want to sell it in such a market. And we've done a deal to secure the balance of what they still hold, which is 23 apartments. So they're all rented, they're producing rental income, and they're sort of ready-made investments, starting from £228,000. On the right-hand side, we've actually got very little left in Sheffield. We've got a couple of units left in a development there. But we are working hard on a new launch, and we hope to have a new launch by the sort of end of this first quarter, early in the second quarter. Just to give you a bit of background, following that, we're looking at a scheme in LEEDS, which we're really excited about. And we've also been looking at a couple of other projects in sort of slightly cheaper Manchester locations as well. So lots happening, and lots that we'd be delighted to discuss with you.
I just wanted to say quickly, I think we've gone through the cities quite quickly. We have vast amounts of research, and we create investment cases for every city that we are investing in. So there's lots more data. If that's want more reading material, please contact us. As we said at the beginning, we're going to do another poll just on the information that we presented to see if we've changed anyone's mind about different cities they would invest in. So we could bring that poll up, and we'll just spend sort of 20 seconds. Everyone could just put their preferred city they would most likely invest in. It would just be for a bit of fun.
While you do that, I've got a few questions come in here. I like the first one. So Saudi Arabia's investment into Newcastle United Football Club. Do we think this investment will trickle through to development within the city, build to rent, which is, you know, buildings that can be rented out as sort of in bulk rentals, and could we see sort of investment from Saudi Arabia and Middle Eastern buyers from Tony? Being a Newcastle fan, obviously I'm delighted that we've got some money finally. But yeah, I think ultimately it will put the city on a bit more of a global map. I mean, it certainly has done with Manchester, and it did with Liverpool, to be honest with you. And I think with Liverpool sort of rise now to the top almost. So yes, I think that it will bring investment, and I think it will bring interest from the region. So it'll be very interesting to see what gets done, because it happened in Manchester when Abu Dhabi, one of the sheikhs in Abu Dhabi, purchased Manchester City. The next thing that happened was a lot of investment was spent in that area, building houses and regeneration. I like the second question, a very good question as well. Just saying that given the boom that the region is seeing, are we still going to be able to find 6 to 7% yields, or are we most likely going to see yields more in line with 5%? Good question. I think so. I think we saw it in London. We've seen it in Manchester. We do see that sort of yield compression, because prices rise generally a little bit faster than rents. And ultimately, as these places develop and become more established, they become lower risk investments. So they generally will give you a slightly lower return, but ultimately potentially give you higher growth on the asset value. That's what we saw in London. So again, I think yield is a reflection of risk. So yeah, I think you need to manage your expectations around rents. We're also, conscious that the build costs are going to slightly increase due to the impact that the world is seeing at the moment, which again will have an effect on yields. Andrew, I'll throw this one at you then. How long are we likely to see these cheap mortgage rates lasting? Cheap lending, some of the lowest interest we've seen.
It's a very good question. I think there's a likelihood of rates increasing by the end of the year slightly, not too much, and certainly they're not going to stay at these rates in sort of the short to medium term. I think they're going to start pushing that up. The UK has also got one of the largest economic growth until 2035 out of the whole of Europe. So with this kind of economic rebound, of course, that they're going to then bring interest rates back up. But there are very good mortgage deals available, and we're seeing really great interest rates for our projects. But it's also on a case-to-case person. So if you are more interested, please write to us. We can advise you further on that. Here's another question, actually, which I think is quite interesting. So for profits, is it better to invest in 2 properties in smaller upcoming markets like Sheffield or Bolton, or 1 property in central Manchester? Now, I think the question really should be, which is the best market? Which is going to have the least vacancy period? What's going to be the least hassle and the highest returns? And I think when we look at markets, we're looking at the supply and demand, vacancy periods, strong tenant profiles. So in that case, yes, Sheffield, we believe, is a very strong market. We don't know much of Bolton. It's not a market that we're currently looking at for a number of reasons. But I think the answer really is, if you could afford a more central Manchester one, and then you've got 1 property to look after rather than 2, it would make more sense. That would be my opinion on that.
Very good. And then we've had another question here from Tony, I think, just maybe leading on from the yield question, just saying what are the 4 cities potentially going to give you? So it depends on where in the cities, right? So you could be looking at yields in Leeds, sort of pushing towards 5.5–6% still, sort of gross yields. You should be looking for the same potentially in sort of Newcastle and Sheffield, whereas then Manchester is going to be a little bit lower. Manchester's probably realistically sort of topping out at 4.5 in a good strong location. Now, if you go into the fringes of Manchester, you go into places like sort of Stockport or Eccles or some of the sort of fringe locations, then again, you might be able to sort of get closer to where the Sheffield and Newcastle yields are, which might be sort of closer to 6. But ultimately, I think the important thing to do is not buy purely based on yield, right? Andrew's mentioned vacancy rates. This is key. Right? We've got a 98% occupancy in Manchester, and that means that is coming in month on month, day on day. That's rental income, and it only takes a month void to effectively mean that your 6% rental yield has dropped back in line with other places. So, and you know, that's the quality of the tenants and the security of the return that you get is important. So look, I think we've taken, seeing we've got another couple of questions here. Another question about mortgages, but I think it's very much, should I take a fixed mortgage rate now? Should I take a variable? I mean, look, these are things that we're not qualified mortgage advisors, but we would predict that mortgage rates could creep up. But I think mortgage rates are going to creep up with economic growth happening. So I think it's a bit of a sort of, you want economic growth, you can't have your cake and eat it. So as the UK recovers, I think they will slightly have to push interest rates up. But at the same time, I don't think we're going to see enough growth to see a massive change. Often when you get slight increases in rates, you'll see mortgage fees dropping, you know, the arrangement fees and some of the sort of connected, they sort of level off, and the costs can sort of be tweaked a little bit like that. You'll definitely see some of that. But yeah, come and talk to us. We've got a brokerage that could give you some good advice about whether you should do a fix or a variable. Last question, and really to finish, is will you be showing the recording? Yes, of course we will. We'll be popping it on YouTube, and we'll make it available to everybody who attended. So I think to finish, Andrew, on my behalf, thank you for everybody for attending. We hope you found it useful, and we look forward to seeing you again on one of our webinars soon.
Yeah, thank you very much indeed.
Take care.